Hey YouTubers, Christopher Wanamaker here doing a new financial literacy advice video specifically on the topic subject of one's Social Security statement. Now, something about this is that this is something completely new to me that I recently found out. The reason why I found it out is because my mom got one. She's less than a week away from turning 62 years old, and I come to find out about this Social Security statement. I didn't even know really what that was. I know it has to do with Social Security, of course, like Social Security income for when we retire, but I did not know anything about this statement that one can look up and download and see what is the federal government tracking for you. And so, pretty much what this is, it is very similar to looking up the three credit bureaus, whether it be once a year, every couple of years, and then going through your credit score, credit bureaus, what are they all tracking of addresses and of everything else? Is it accurate or are there discrepancies? And then you have to work on collecting whatever kind of documentation, paperwork, and proof, proving that there are inaccuracies and correcting them, and then your credit score goes up. This is very similar to that, but it has to deal with Social Security income instead of dealing with your credit. And so I looked more into it. I went ahead and downloaded my own just recently at the end of this past June 2025 because I wanted to see what is the federal government tracking for me. They have been tracking every single year from 2003 all the way to 2024 last year of my earnings taxed for Social Security and earnings taxed for Medicare. From every year when I started working since 2003 when I joined the Army Reserves. So had to download all this information. It's kind of like learning all the hints, tips, and tricks. There's a lot of details and all that. They go over retirement benefits, disability benefits, survivors benefits. They go over the Medicare. Do you qualify and all that? And then your earnings record with an Excel chart for every year. What are they tracking that you earned? And important things to know about your Social Security benefits, all the little hints, tips, and trick rules. So the main thing about this that I have learned by reading and understanding and all that is that you have to, they go off of a point system. And so every quarter of the year, which is every 3 months, if you made $1,810 or more in taxed income, then you get a point. And so to qualify for your Social Security income in the future, once you hit retirement ages between ages 62 to 67, then you need a total of 40 credit points. So you have to get a little bit more than $1,800 every 3 months, and then that's 1 point. The cutoff is 1810. If you make more than that, great. But you have to make at least $1,810 every quarter of the year, and you get a point. And so you have to do that for a total of 10 years worth. You have to get 40 points. So once you reach 40 points, then they say you are authorized and based off what we're tracking of your yearly income from every year, then here is a chart: personalized monthly retirement benefit estimates depending on the age you start. And so to give an example, there's the chart right there, and it says like age 62 all the way to 70. What will you be qualifying for? So as of right now, what they're tracking for me, age 62. If I, at 62, I start pulling out Social Security income. If it's still around at the time, I will qualify for $1,205 a month. If I wait all the way down to age 70, every year I hold off, I earn more. Age 63 is $1,287. Age 64, $1,373. All the way to 70, $2,128 from Social Security income. On top of, you need also the same points to be able to qualify for Medicare at age 65. So, to give you an example, my mother, who in about less than a week will be 62 years old, when she got hers Social Security statement in the mail, and I guess if you've never went to the SSA.gov Social Security Administration website to log in and download this yourself, which I highly recommend anybody from between the ages of 35 to 45 start doing and looking into to see if there are inaccuracies that you need to call up the Social Security Administration, set an appointment, and go to a Social Security Administration federal building. There's one for me, probably 20 minutes south of here in Vancouver, Washington, and then sit down with them and be like, hey, I've looked over what you're tracking for earnings and what I'm tracking is different. Can we set an appointment? And then hopefully you have like the past several years worth of tax paperwork. You have your 1099s, your 1040s, your W2s, and whatever else they require, so that way you could sit down and go over anything and then try to figure out, is their numbers, are they accurate or are they inaccurate? And then of course if they're inaccurate, depending on which way it goes, is it too high, too low, whatever, you might get some money from them or you might owe them some money. But having this accuracy is important and up to date, and for all the following years that you work, staying on top of this, I'd say every couple of years, kind of like staying on top of your credit score, monitoring of your reports, and is everything accurate that you see. If there are inaccuracies like wrong address or it's saying that it's they're tracking someone else's information, but it's on your profile or something like that. So accuracy with this Social Security statement is important because it will affect how much you make from Social Security, whether you dip into it at age 62, 63, 64, 70, whatever. Hopefully, the longer you hold off, the better, especially with everything increasing in price and costing more. The longer you can hold off before dipping into your Social Security income, the better. Now, with my mom, unfortunately, with her Social Security statement, once you reach 60, if you've never logged into the SSA.gov and downloaded this yourself, then at age 60, age 61, age 62, once a year, they send it and mail it out to you automatically to what address they have on file. But her records show that she pretty much was 4 points under being able to qualify for higher dollar amount of Social Security income, or specifically because she has MS, multiple sclerosis, she was 4 credit points under from qualifying for SSDI, which it would have been multiple hundreds of dollars more, maybe even $1,000 or more than what she actually gets from SSI. She pretty much any income she gets is from SSI automatically because she is medically disabled. So, but she doesn't qualify for SSDI. I've always found that to be very weird and strange. But so there's all these little hints, tips, and tricks. This is something to definitely, I'd say between ages 35 to 40, go to the SSA.gov, website, log in, create a username, log in, and then download this, and then or have them mail it to you or whatever, and then and you have to have 40 total points to qualify for your Social Security income in the future, and the dollar amount will depend on what age do you start pulling from it, and how much you earned is depending on how much did you make with at least 10 years or more, 10 to like 45 years worth of work in. I believe they go off of your highest dollar amount each year. So the top 10 years of highest earnings is what they will be going off of for what do you make between ages 62 to 70. So in the future, if I got older and I found another job or a way higher paying job, and I'm making going from 57,000 net income to say 150,000 or whatever, then in the future the chart of what I'd make at 62 to 70 would probably definitely drastically change and increase on what I'd be pulling out. It's very similar to pulling out unemployment, and then they're going off the data of like where did you work, how much did you make, how much did you put in taxes and everything, and then that will determine what was your gross or net income, depending if you're W-2 or 1099 self-contractor kind of person. How much did you submit in taxes and Social Security and all that, your earnings, and then that will be, they do a mathematical formula to figure out how much are you going to get per week from unemployment for 26 weeks or 6 months worth. So it's very similar, but dealing with Social Security income. So a few important little notes that you should be aware of is important things to know about your Social Security benefits. Social Security benefits are not intended to be your only source of retirement income. You may need other savings, investments, pensions, or retirement accounts to make sure you have enough money when you retire. You need at least 10 years of work or 40 credits. That's one credit per quarter as long as you've made more than $1,810 to qualify for retirement benefits. The amount of your benefit is based on your highest 35 years of earnings. If you have fewer than 35 years of earnings, years without work count as zero and may reduce your benefit amount. To keep up with inflation, benefits are adjusted through cost of living adjustments. If you get retirement or disability benefits, your spouse and children may qualify for benefits. When you apply for either retirement or spousal benefits, you may be required to apply for both benefits at the same time. The age you claim benefits will affect your surviving spouse's benefit amount. For example, claiming benefits after your full retirement age may increase the spouse. If benefits start at full retirement age amount on page 1, claiming early may reduce it. There was something about divorce in here as well, which is important. If you are divorced and were married for 10 years, you may be able to claim benefits on your ex-spouse's record. If your ex-spouse receives benefits on your record, that does not affect your or your current spouse's benefit amount. If you receive a pension from earnings not covered by Social Security, your benefits may have been reduced prior to January 2024. The Social Security Fairness Act ended the windfall elimination. And then there's some websites about pensions and other benefits and all this other kind of stuff. So, that is something that my mother is planning to do. She was married to my ex-stepfather for 11 years and then divorced. And he made way more money being a truck driver. The only time that she worked, she was mostly a stay-at-home mom, but she did work for several years at a Kmart and Walmart in, I believe it was Chehalis, Washington. And but she didn't work long enough because then she got MS, came down with that. It was affecting her work, so they let her go and all that. But the main reason why she was working is to pay off QVC purchases. And then maybe every now and then spend a little bit of money on her children or on herself, rarely. But she was a bit of a QVC phone or online shopaholic. And then my ex-stepfather was like, no, you need to get a job to pay this off. I didn't put us in debt, you did. So, this is your responsibility to take care of. Go get a job. So she did. But unfortunately, she didn't work long enough. If she was 4 points away from being able to get like SSDI benefits and all that. She needed 4 more credit hours, so 1 more year's worth of work. But the MS, hit her pretty hard. So this is all really important information. It's something that people should look into as part of a financial literacy of adulting. It's something that I wasn't aware. I just turned 40 2 days ago, but I found out this past summer, and so this is just another new adulting thing that a lot of people don't know about, that they don't teach us in high school when we were seniors before we get into adult world. Like I don't teach us about budgeting and credit cards and credit scores and APR interest rates and all this other kind of stuff. This is another important thing that somewhere between the ages of 35 to 45, in my opinion, we should be looking into. So definitely go to SSA.gov, log in, download this, and if you've been working for 10 or more years and making enough money and all that, they should be tracking. And then if you have the paperwork to look into things, whether it's actual physical documentation or it's you have it on a computer on digits, PDFs or whatever. Compare these numbers that the Social Security Administration is tracking with what are you tracking or what your tax accountant was tracking. And then, according to my older brother, who is my tax accountant, if it's a little off by, tens, 20s, $50, a couple $100 worth, it's maybe not that much of a headache. It might make $1 or $2 difference on what will you receive from Social Security income when you retire. But it's a bigger thing if it's thousands of dollars of the difference. So if there's like 1,000 or more difference of what tax paperwork is tracking compared to what the Social Security Administration is tracking, that it's a big enough discrepancy to dig into, contact the SSA, which is 1-800-772-1213 is their number, and then maybe make an appointment with them and gather all documentation that either you believe you're going to need or they request from you to bring with you to get everything straightened out. And if it's a big enough discrepancy, they were tracking zero, or they were tracking $500 and you made 50,000, then that's a pretty big discrepancy, and it will drastically change what you can pull out when you retire. So I believe that's all I have for this newer topic subject. If you like this video and this advice, please hit like, hit subscribe to my channel. And I have many other videos. This will make 57th video covering 33 different topic subjects. Check out my other videos on my channel. Hit like and subscribe. Make any comments that you wish. And I hope this helps you out. All right. You guys have a good day and have a fantastic rest of the summer and stay safe. All right. All right. And keep learning, keep improving, keep it growing, and keep learning and just keep bettering yourself and your life and your future and your finances and budgeting and all that kind of stuff. Just never stop learning and growing, okay? And you guys take care. All right, be safe. Bye.